Hey everybody, good morning to you. It is Thursday and I'm sitting in here for Trader Talks this morning. Glad you're here, whether you're watching live or watching on a recording. We're just happy you're here. Now, hey, I am joined in the chat by Mike Fairborn. He's a good friend of mine. I've known Mike for many, many years, and he's uh, he's he has several webcasts I encourage you to check out as well, including a ThinkScript webcast he teaches each week if you want to improve your ability to use the Thinkorswim software platform. Hey, let me just mention this. You can follow either of us on X, at Brentmore CS, at Mike Fairborn CS. Also, before we get too far into this, and we'll go through the agenda in just a sec, let me just mention a few things. One, the information today we're going to go through is for educational and informational purposes only, and it's not an individual recommendation or personalized investment advice. And we'll look at individual stocks today. Those are not recommendations. Options do carry a high level of risk and are not suitable for all investors. The paper money software application is intended for educational purposes only. And that paper money software application that we're going to use uh, does not assign short options early. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results. All investing involves risks, including loss of principal. And virtual currency derivatives trading involves unique and specific significant risks. We're not going to do ETFs today. Tomorrow, if you stick around, we do on tomorrow morning, we'll do ETFs in this Trader Talks session. What are we going to do? We're going to talk about major market indices. We're going to talk about the trends of various market sectors. We're going to look at different charts, different time frames, support and resistance levels, and maybe even look at a trade or two here as we go into this today. So, having said that, let's hit on up the S&P 500. See some familiar names in the chat. Glad you're here. Appreciate everybody. Market's down a little bit today. And so we seem to be having, if I'm going to zoom in just a little bit, that's a 1-year chart. Let me just zoom in here to a 6-month chart so we get a little better view. We pulled back. It seems to me that this low that we had back in kind of mid-January, right in this level, is probably a fairly significant level from a technical standpoint. We'll see if we can hold that. And when I say hold it, I do mean hold it end of day. If we were to go down intraday a little bit and then bounce back up, then those support levels, resistance levels are more significant when they are end of day closes typically. But right now, I don't know. If you look back several months, uptrend. Seems like we're flattening out a little bit. Is this a potential channel that we're in? Now we can see how we're starting off the day here by just going to a 1-day, 1-minute chart. Let me just zoom in. This is yesterday's close here. You can see we started down, maybe picking up a little bit of a support here if we wanted to. In fact, if we wanted to, we could even throw on some pivot points and look for individual levels here on those pivot points. And that's showing the low there. But this is our support level we drew before. You can see that's right kind of near that S2 level on this. So we'll see, is this going to potentially act as a resistance, this S1 level? Once we open below it, and we opened right at it, went down, that could potentially act as intraday resistance on that level. So the S&P 500 as a whole, kind of flagging a little bit, but let's just take a look at something else. Let's look at the S&P 500 equal weight. And so here we're taking all 500 of those stocks in the S&P 500 and weighting them equally. All-time high yesterday on the SPX equal weight. So that's because technology has been driving things, has been underperforming. Primarily technology is the biggest culprit here. And technology is the biggest sector. And so, you know, it's hard when other sectors are doing well to hit those to hit new highs if technology is not participating, and that's what we're seeing right now. And you can see that reflected in certain individual technology companies. But when we look at this, let's look at AMD just to kind of, we'll get back to some indices here in a sec. But you can see AMD, tech stock, semiconductor stock, and kind of this is probably a pretty key support level here on AMD. These lows here, right around $200, okay, right around that psychological level of $200. We'll see if we get a bounce here. The good news is it's not as big a candle as it was yesterday. It didn't gap down, but the bad news is we're still right here. We'll have to see where this goes here, but this has kind of been just representative of what we've seen in tech of late. That is a sell-off there on that one. Now, let's look at the NASDAQ, and let me just pull up INDX. You can see that reflected in the NASDAQ, which is almost 50% technology. And you can see just the difference between the NASDAQ and the S&P 500 that we saw. If we go longer term on this, let's go out to a 3-year chart. It puts it in a little perspective. I mean, technology's had a pretty darn good run for 3 years, flattening out a little bit, but sometimes I think going to the longer term chart, you can see this. Probably some support down here that, we'll see if we get to or not. Let me go back to that 2050. That's down here. So you can see that off this line here on this. And we've definitely seen some weakness in that NASDAQ. We've seen weakness in almost everything. Here's small caps, Russell 2000. Hanging in there pretty well. Yesterday we were down, and we're down another 0.5% here today on this. Remember, you can always check out different time frames, and if you want to look intraday, you can go to the 1 day, 1 minute, you can go to the 5 day, 5 minute, or something like that. Here's a 5 day, 5 minute if you want to look. So here's the last 5 days, but you can always zoom in and look at this, and you could see today's open. These are 5-minute candles. So we gapped way down on that, but this candle is promising, maybe a little bit of rebound in the market. We have two kind of important reports here. One came out already. That was the jobless claims report. And then the JOLTS is coming out later this morning here. But in fact, let me go back real quickly to the S&P 500 and just see if I'm going to go to that 1 day, 1 minute chart. And actually, we're not going to see that because that's after hours, and we're not trading after hours on this. But so we'll see. Anyway, open up lower, heading up. Let's take a look at some of the major indexes and just get a sense for where things are. Because given what we've seen in the market right now, maybe you'd expect a little bit more uncertainty in the market. And that's exactly what we're seeing with the VIX. The VIX is going up. Now, I'm not planning on trading options today, but the VIX is an indicator of option premiums. And option premiums go up when there's more uncertainty about the direction of the market, more expected volatility of the market. You may hear the term implied volatility. Implied volatility is just expected future volatility of the market. So on an individual stock, implied volatilities go up if it's about to have earnings, because there's more uncertainty with that earnings. If there's more concern in the market overall because of geopolitical risks or economic risks, implied volatilities go up. That's because people buy more options. People buy, for example, more put options to try to help protect their portfolio or hedge their portfolio. That drives up that implied volatility. And this is just a measure of the implied volatility of the S&P 500. You can see we're up over 20 now. That's significant. You can see it peaks out periodically. That's a 1-year chart. That's a 6-month chart. Let me go to the 1 year. And so here we are. You can see we're at a higher level right now of IVs. When implied volatilities come up, they don't usually stay up for an extended period of time. This one went up very high, but this was kind of the tariff tantrum, so to speak, uh, and in the market, but it reverted back to the mean. But when implied volatilities go up, there's just more uncertainty. Some options traders will use that to try and help them out along the way. Uh, we've seen this the partially because of earnings. We've gone through most of the major names on earnings this go around, but not all of them. Today we have later after the market closes today, we have Amazon coming up on earnings. So someone's asking, Kay Brown's asking RSI and the VIX. You can look at the RSI and the VIX. It's not, I wouldn't say it's a standard thing to necessarily look at the RSI and the VIX. I don't know if you can see this very well here, but you can see, hey, it's gone up there. But the VIX is kind of a derivative investment in terms of not in the sense that it's an option, but in other words, it's the value of it is kind of second tier based on what people are feeling about the market. And so I'm not sure I would necessarily use traditional technical analysis using the VIX, other than the sense that it will tend to revert to the mean there. Okay, let's talk Amazon here for a sec, because we have earnings coming up after market close today. And of course, things can change, but we're starting out the day on Amazon not on a great note here on this. And they do, by the way, plan to deploy AI tools at Amazon MGM Studios to cut costs and streamline parts of the movie and TV production process. But in anticipation of earnings, and this is coming out after the market closes today, not a lot of optimism not a lot of optimism being put out there on Amazon right now. Now, last night we had earnings on Google, or Alphabet, I should say. Here is where we opened up lower. Let me zoom in just a little bit here. We opened up lower, significantly lower, by the way. But we've bought up a little bit. The market has it's gone up a little bit since then. They projected a sharp increase in AI spending and called for the 2026 capital expenditures of 175 to 185 billions above expectations. So even though they beat both top and bottom line, the increased expenditures seems to be what's hitting them, although it seems to be recovering fairly well in the market right now. And so that's, we're seeing a nice little bounce there on that after the lower open. But that's not, 2.5% down. This is big enough to have a significant impact in the market. Another company that had earnings last night that we're seeing the movement on is Qualcomm, down 8% today on Qualcomm. Well, they posted a weaker than expected forecast due to global memory shortage. And hey, the market didn't like that. Again, if you just look at the heat map or visualize tab, you can see here's Alphabet, obviously a big player in there. Oracle not as big, but still not a teeny company either. But that kind of affect the whole tech sector. But it's a little bit more of a mixed heat map today overall as we're looking at that. Now, coming out after earnings, we already mentioned Amazon, but we have a few other companies that I should mention that are coming out with earnings after market close today. Affirm is coming out with earnings. We'll see if that support holds for them. not a strong stock. The trend has been going down. We just recently had a 20 and 50-day moving average crossover. But of course, things can change with earnings. Other companies coming out with earnings today. Reddit, huge downward momentum right now. Big sell-off. We'll see if that continues, if it's something that can shake it out of its trend down. And another one that is coming out with earnings that you may be of interest is Strategy. Strategy has been tumbling, of course, because so much of their fortunes are tied to this. Now, this is Bitcoin. And just a reminder that as we're looking at this, digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. Due to the high level of risk, investors should view digital currencies as a purely speculative investment. But we're down now, right now, we're down below the $70,000 level. So that's probably a pretty key level, I would say here. Again, 80,000, 70,000, 90,000, 100,000 are all kind of key levels there. Right now, the trend has not changed on Bitcoin. I don't know if this is going to shift or not anytime soon, but those of you, just be aware on your crypto investments, just how volatile they are. Crypto for a while seemed to be pretty highly correlated to, kind of the tech sector of the market, but it kind of broke that a little bit. And it's dropping even more than the tech sector. The tech sector tends to have some volatility, but Bitcoin, we're not really seeing any sort of bounce right now on this. So this is, there's your Bitcoin chart. In terms of other commodities, let's talk about some of them. Let's talk about gold. Gold, which has had a stellar performance overall for the last couple years, really. And I have a Fibonacci on here on gold. It's kind of went parabolic there for a little bit, dropped off, looked like it found a bounce, maybe a little bit of a resistance right about that 38% fib level on that. So we'll see where we go from here. We're right back down at that 20-day moving average on gold. Gold down about 1.5% today. But check out silver. Silver, which went up even more than gold last year, down 10% today. So the charts in some ways look very similar. This is a pretty big drop. We're down to the 50-day moving average on silver. And just to show you how much we've dropped over the past, I don't know, week or so, we've gone from here to right there. It's about a 46% drop here. Do I have that right? Let me just double check that. A 36% drop here over just roughly a week's worth of time there. So whenever you see these things that are going parabolic, it doesn't mean that you can't trade them, but it does mean that when it goes up that quickly, they can also drop down more quickly. Now, we're not going to talk about trading this today, though, because this is a future and we don't talk about futures trading in this class, but we're just looking at the price of this class, price of this commodity here. In this case, the commodity is silver. What about another metal commodity here that we're looking to look at the price of? Copper. Copper has, it's down just a smidge today. Didn't have near the upward move as either gold or silver, but it also, it didn't drop as much either. It's kind of I can't make an overall generalization. I can't say, this is always going to hold, but in general, stocks or commodities or things that move up quicker in price, when they fall, they tend to fall down quicker in price. That's just that's just how volatility works. Volatility isn't directional. It's bidirectional. It can go either way on that. Let's look at another commodity here. And this is crude oil. Here's crude oil. We have seen a pretty significant increase. Let me go to a year chart though on oil, because this the shorter term chart looks like a huge rise, and it has been a big rise, but this was actually a fairly low level. And when we look at this, we'll see a lot of this is geopolitical tensions. There's news out that the U.S. and Iran are agreed to hold talks in Oman on Friday, and that could help to ease the price of oil here. Obviously, that affects not just oil, it affects gasoline, not necessarily directly. There's a difference between the price of oil and the price of the refined product, that is gasoline, but there's a general correlation there. It affects shipping costs for companies that are paying to ship their goods. It affects the overall inflation. So it's kind of downstream. Each of these in turn get affected. It affects the overall inflation rate. And, so certain parts of the economy do well when oil prices go up. But in general, there are some negative consequences if this were to continue up for a long while there. So that's something that a lot of people keep an eye out on there. Now, let's talk about a few stocks that are in the news here, okay? So let me go over and just pull up Meta, company you guys all know. Here is Meta. Had a kind of a big flag coming down. Are we going to bounce off our 20-day moving average is the question here on Meta. Meta recently told some staff in its Meta Superintelligence Labs group, which is the company's new AI team, that its next generation LLM, large language model, known internally as Avocado, is now Meta's most capable pre-trained base model to date. Okay, so Meta had a great earnings report about a week ago. Coming down, we'll have to see if that bounces off of the moving average and if it goes up here. By the way, if you are interested in placing a trade, and this is just going to be an example trade, by the way, and you're going, well, look, I kind of like what I see. I think it's going to bounce, but I'm not sure if it's going to bounce. What I'd like to see is I'd like to see it break back above maybe this potential resistance level. In other words, this candle right here, which is a relatively bullish candle, even though we're kind of mixed today. We're well off our lows. We're right near our highs. If it breaks above here, I'm interested in buying it. Let's say that's your take. This is not a recommendation. You can do this. How do you do this? You can put an order to automate the buy if the stock breaks above a certain level. So the way to do that is you do what is called a buy stop order. Okay, so most of you are probably familiar with sell stops. In other words, you buy a stock and you put a stop loss in beneath the price in case the stock goes down to try and get you out. Now, stops aren't guaranteed to get you in at the actual activation price, but it's because they turn into market orders. But what a buy stop instead of a sell stop order is basically if the stock goes above a certain price, in this case, we'll say right around here. If the stock goes above a certain price, willing to buy it. And only if it goes above that certain price. Okay, that's a buy stop. You can also at the same time put in a sell stop. And we could say, well, if indeed it bounces above here and is going this direction, I can then put a stop down here, a sell stop down here to try and get us out. So how do you do that? Here's how you do this. Okay, so let me go and let me just find this price. This price is about 676. So I'm going to say 680 will be our buy stop, okay? And if it drops back down below here, and we'll say back down to about 665, 665 is going to be our sell stop. So if we break above here, we're going to get in. If it then reverses course, breaks our new supposedly support level back down here, we're going to get out of this. And we could even, if we wanted, put in a target price and say, hey, if it gets up here, we're going to say that's a pretty good run. Probably wouldn't happen real quickly, but around 730, we'll say 735 is going to be our target price. So let's put that in. I just jotted those numbers down because otherwise I would forget those numbers. I'm just going to right click on the chart. I'm going to buy custom with an OCO bracket. Okay. Buy custom with OCO bracket. What does that do? Here's the buy. The OCO bracket gives me two separate sell orders. One is going to be the target price. One is going to be the sell stop if things don't work out so well. But we said we were going to use a buy stop only if the stock goes above 680. Do we want to do this? So this probably isn't going to fill very quickly, but I'm going to change limit to stop. Okay. Limit to stop. This is a buy stop. I don't have to write buy stop. This is a buy over here. Buy stop. And I don't want it to just expire at the end of the day. I'll give it a couple days here. I'm going to put on good till canceled. In fact, I'm going to make all of these good till canceled. And on this, what was our price? Well, 680 was our price here on this, was our buy stop price. So I'm going to put this in. Now, there's 680. Okay. So question, shouldn't we wait until we get a hold, possibly tomorrow? This is waiting. This is the whole point of this trade. We are waiting on this until it breaks above a certain level. Here, let me just push this back down. We are not getting in right now. We're only getting in if the stock goes above here, okay? That's the point here on this. So we're not getting in unless this, now, could this happen today with a big enough candle? Okay, if we get to midpoint or more, that would be, so technically, maybe not a hold. But if you wanted to move that to a hold, in other words, well, here's our low right now. This is our low day technically. This would be the previous low candle of the low day. If you wanted to move it up to there, you could do that too. But here's what we're going to do. Okay, that was our buy stop right there. We said we were going to put in a target price. The target price was going to be $735. Target price is the limit price. I already made it good till canceled. We're going to make this $735. $735 here is going to be our target. And let me just increase this so we can actually see the price here a little bit better. $735 is going to be our target price. Again, good till canceled. That's a limit. And then finally, our sell stop, we said it was going to be back down to $665. And that's to get us out if it's 665 or less. Now, keep in mind a couple things. One, stops aren't guaranteed. This could gap down to $600, $500. Probably unlikely, but it could. And the stop would probably fill around the, whatever price it gaps down to at that point. Can you possibly change that so it won't fill down there? Yeah, but it may never fill at that point. If I do a stop limit instead, where it's going to ask me to say, put in the least price I'm willing to sell it for, then if it gaps down, we'll still just be holding on to the stock there. So there's pros and cons to both. But also, keep in mind the price of the stock. This is a $669 stock. If I were to buy 100 shares of this, that'd be like a $67,000 purchase. Well, that's probably a little bit expensive for a lot of people here. So I'm going to make this 10 shares instead of 100 shares. if we get in. We don't know whether we're going to get in. It's only going to get in if those orders go through. Furthermore, let me just do one more little addition to this, and then I want to get back to looking at some other stocks. We can say, look, if this doesn't go up in the next couple of days, I don't want to wait on this. I want to cancel out this order if it doesn't bounce in the next, well, we'll say 3 days. So let me go back to here. If I want to cancel that order on a time frame, I can go to the little gear, click on that gear, and say, I'm going to cancel this, put a little check mark next to it. That's Thursday. We'll say by Tuesday of next week. A few trading days there. And I'm going to save that. I can confirm and send. And there we go. So just make sure you read this over, and just make sure this all makes sense for you. And then if you have different groups or something, we could just say, well, that's a long stock group. I'm going to click on send, and there's the order. It's not going to fill because we're not above. We need it to go above that green line, basically, for it to fill, for us to trust that this is a bounce breaking forward there. Okay? So let's go forward here. Let's move forward. Let's see. We already talked about Google. Let's talk, or Alphabet. Let's talk about Tesla, because Tesla's been in the news. Tesla, technically, I mean, it's been fairly bearish. We're below the 20-day moving average. If I were to say draw the trend, this is kind of the trend I would consider on Tesla right now. We already had earnings, so this is just kind of a, if I'm going to consider this stock, I'm going to consider this kind of in this channel right now. And there we go. News on Tesla. So this is kind of SpaceX news, but let me Tesla SpaceX is seeking early inclusion in major stock indexes to boost liquidity for its planned IPO. Also, OpenAI has accused Elon Musk's xAI of systematic and intellectual destruction of evidence in its lawsuit, saying xAI used ephemeral messaging tools that auto-delete communications. Bloomberg reported. Okay. And Tesla is sued over a crash that killed a Massachusetts driver, Bloomberg reports as well. So not great news coming out of the Tesla sphere right now. You can see that reflected in the stock coming down. If the stock is down here, you'd expect maybe, it probably wouldn't be unreasonable to think it may retrace a little bit. But even if the stock retraces, that doesn't change a trend. Same thing if a stock is going up. If a stock is going up and it retraces, it doesn't mean the trend is over. Now, at some point, you'll be going, well, it may bounce up again. At some point, it breaks. So if it retraces and then breaks above this level up here, then we'd start to question whether that was a break of the trend there on that. Okay. Trading Grow said the JOLTS report is down. That's job openings and labor turnover. And so that we'll see if that affects the market as well. Also, a question from Gerald. Hopefully the sell orders also cancel with the buy order. I think you're referring to the meta trade that we did. Let me just remind you on this. When we did this meta trade, this was an OCO order. Okay. This was an OCO order. I didn't really go into this. An OCO order, or the first triggers OCO orders. So the sell orders don't even come into play until the stock is bought. That's the first triggers part of it. The second stock is triggered by And then these two are linked. See this little link here? These two are linked. When one fills, that is, if we hit the target, the sell stop will cancel, or vice versa. So that's why we do an OCO order on that. So hopefully that answers your question on that. So there we go. Let's just see if the market is reacting to the JOLTS report, SPX, and go right here. So JOLTS report, I'm trying to think, let me see if I can find when that came out. JOLTS, 10 a.m. Eastern, that's 8 o'clock, that my time, which is right here. So market not, I mean, it was already trending down, so it's hard to say whether that was the reaction to the JOLTS report or not. But market is just continuing to head down on there on that. Okay, let's take a look at some sector action here and see how we're doing. Here's sectors. Just open this up. And we can see the 1 month return, by the way, on these sectors. This is just a 1 month change column I have on here. And you can see staples, a little bit more of a defensive sector, has had a pretty good month. That's 13% right there. Energy, oil's probably helping the cause there on energy, although keep in mind there's a difference between oil and the overall energy sector. Okay? In fact, if you look, let's take a look real quick and just kind of look at the industry groups within energy. Energy is our first group here. So here's the energy sector. Here's the today's change, you can see overall, and the 1 month change. Energy sector as a whole over the last month has been pretty good. And of course, oil and gas, we have different oil and gas. Let me move this over just a little bit. And you can see not all created equal, although all in all, these are doing fairly similarly. Oil and gas exploration about 8%, integrated oil and gas up about 13%. You know, sometimes you see very big differences in these industry groups. So for example, if you go to technology, what you'll see is here's information technology as a whole. It's 1 day, 1 minute. Let me just do this. Here's IT as a whole. Here's IT software and services. That's really taken a huge dive here. Let me just change this real quick. Really taken a huge dive. Compare this to the rest of the technology sector. Technology hasn't done that bad. I mean, if we do that, if I just do IT overall, here's IT overall, huge difference in those charts. If I do semiconductors, here's semiconductors. I mean, those are like 3 completely different charts. And so, you know, semiconductors, strong, software, not so much, but you see big variations within industry groups, within sectors there. So just be aware of that. Energy has been strong, staples have been strong, materials have been strong. We've seen that in gold and silver, starting to come back down a little bit though on those. Industrials, what's been weak though over the past month? Not a surprise, the laggard has been IT, okay? Information technology down 6%, and that's a biggie in the market. Financials down about 4%. Discretionary down about 4%. Let me just, we're getting a little low on time, and I just want to mention to you an approach that you can use, and I'll try and answer some questions here. An approach that I can use to, if you wanted to find stocks, and this is actually going to match up with the question. Okay. Montana said, where can I find integrated oil and gas company list? Here's what you can do. One, you can always go to your watch list, go to by industry, go to energy, and go down and find it right here. Okay. You can select all energy if you want, but you can go here. And you can do this for any of the groups, integrated oil and gas. And then when I go here, here's the list. Now, there's a challenge when you do this, though. And the challenge is, let me just add a column or two here. We'll say percentage change, and let me do the mark price here, okay? Let's just look over and look at some of these, okay? So I can look here, and here's your integrated oil and gas list. But you're gonna see some of these are like 67 cents. This actually list isn't too bad, $2. This list, these are kind of bigger companies here. But sometimes when you break it down into everything, you end up with a lot of penny stocks in there. So there's a couple ways to do it, to deal with this. One, you can add in a column that is like a market cap column, okay? Customize cap. And then, let me just get rid of this just to make things a little easier to see. Here's your market cap column. Then you can sort by market cap, and you can say, I only want to see some of these bigger guys. ExxonMobil, Chevron, and so on. You go, well, let's see how they're doing. They're actually, I mean, ExxonMobil, that's like taking off here. Could we do a sample? We could do a sample trade on this. If we were to do a sample trade on this kind of goes back to what we were talking about earlier. Things that are more volatile, when they go up very quick, they can drop very quick. So one approach to that is, if you do buy it, you may consider adding in a tighter stop. So if I put a stop here, we'll say this is maybe a support, little flag here, okay? Went up, little flag. When we get down here and bounce, we're going to consider that kind of a new support level. We could put in our stop right here. Now, if oil gaps way down, it doesn't mean we're going to stop out here. One thing about oil in general is these companies tend to have more of a propensity to gap up than gap down. That's different than most companies out there. Why? Because oil shocks tend to be big moves up because of geopolitical events or something like that. Rather, let's say some big geopolitical event occurred in the Strait of Hormuz or something like this. Oil prices are likely to gap way up, and that's probably going to affect. You probably see some positive result out of Exxon. The rest of the market, probably not so much. This is just the opposite there on that. So just, if you do something that's moving up kind of at a super rapid rate, I mean, you may always decide you use stops, and stops aren't guaranteed, but if you do that, probably more traders would say stops are more important in that regard to try and help you in case there's a quick reversal on that. Okay. You know what? We're out of time, folks. So I'm going to call that a day here. Just use what we talked about here in terms of finding the individual sector and the individual industry group. You can go to the public list, sectors and industries for those industry groups. If you sort them by the symbol, even though the symbols don't make sense, add a description column. It'll put them by the sectors. Here's the energy sector. There's the materials sector. Keep on going down, industrials, and so on. And then you can see those stocks. You can see how each of those industries are performing. You can also look at individual stocks by going to the watch list and going by industry right there. Okay, everybody, thanks for joining me today. And coming up at 11 o'clock Eastern time, we have long verticals and diagonals. Thank you, Mike, for helping me out in the chat. Each of you, I appreciate your time and encourage you to give us a follow on X at Brentmore CS, at Mike Fairborn CS. Have a wonderful rest of the day, everybody. Bye-bye.